Hello, listeners. Welcome to a new episode of the Unlocking the Energy Trilemma podcast. Today, we have a very international session with Ravi at Dubai, Jam at Madrid, and Neil Weaver at Texas. Neil is the Director of Research at Modo Energy, a data analytics platform that provides benchmarking, forecasting, and analysis of grid-scale battery energy storage markets, which is the topic for today. Ravi, Jam, over to you.
Thank you, Ava, and welcome, Neil, to the Unlocking the Energy Trilemma podcast.
Hi, thank you very much. Thanks for having me.
So, as we do with all our speakers and guests, we ask them to share with us a fact or a figure related to the energy trilemma and the topic of today, which is battery energy storage systems. So, what do you bring us, Neil?
Hi, yes. So I work for Modo Energy, and we're real battery energy storage nerds. That's what we do. And so a lot of what I speak about today is going to be based in that world. And one of the big things that is really changing in that world right now is CapEx costs. And Modo Energy recently did a study into CapEx costs in Great Britain of containerized BESS. Now, when I say containerized BESS, what I actually mean is not just the price of the cell, but the price of everything around it, including the cost of installation and grid connections. And so if you look at the cost of containerized BESS that's going in the ground today, we're looking at about 280 British pounds per kilowatt to build that battery. There are some other costs that will be added on in different places, but it's around that. But if you're currently planning a project and it's due to come online in 2028, so in 3 or 4 years, the price is actually half that. So we're looking at about £140 per megawatt. So that price is in 3-4 years. And it's not our study, but this week, Motion just put out a study looking at the cost of containerized BESS in China. And they were saying that for the first time in Q3 of this year, that had dropped to around $80 per kilowatt hour. Now, I'm not suggesting that prices in Britain or prices in the United States are ever going to match that sort of cost. And we might be seeing that hit a floor in China. But when you're talking about build costs coming down that quickly, it just changes everything.
So what do you think are the reasons behind China's dominance in the lithium-ion battery value chain, and what lessons can the United States actually learn from this approach? And I was at a recent conference at RE Plus in California, and more than 70 to 80% of the battery makers were of Chinese origin. So how does it impact the competitiveness of US battery makers?
There are certain advantages that you will have being China. They have access to a much larger labor force. And so that technology is progressing and evolving very quickly there, making scale much easier. One of the interesting things actually is this idea that a lot of the Chinese battery manufacturers are basically they're making zero margin. It's a land grab that's happening. And it'd be very interesting to see if US, UK, European battery makers would ever be willing to enter into that sort of thing, right? People are after market share, first and foremost. It's hedging their bets that if they get the biggest market share, the profit will be there forever. But at the moment, they're willing to operate on zero margin. And I think in America, there's a big tilt towards trying to encourage North American manufactured batteries. And there's a load of really great companies and businesses out there doing that. And tariffs on imports from China, whether they'll ever be able to compete on that sort of cost level, I'd be very surprised.
But Neil, what is the business model for a BESS owner today, and what do you think will it be in the short future?
So this is a really interesting question we think about all the time, because in the last couple of years, what you've really seen is in those immature BESS markets that were starting up, first in Great Britain, then in North America. Now you're going to see it in parts of Europe. Batteries come in and they solve a problem that a lot of grid operators weren't even necessarily sure they had in some cases, right? Which is they come in, they do ancillary services, and they clear up that need for inertia, that short-term balancing of the grid. And what that does is it creates a market every time where batteries earn a lot of money for a couple of years. because the grid can all of a sudden move away from getting inertia from these old legacy thermal plants. And so it pays batteries as they're coming online to do so. And what is batteries come online in tens of megawatts and hundreds of megawatts. And the grid operator or the RTO will think, we maybe need 2 gigawatts of these services. And so while you're still getting to 2 gigawatts in these ancillary services, these super fast acting batteries are taking very high prices. There's a big revenue boom. In the UK, we were seeing £17, which is about 25 US dollars per megawatt hour to do these services for a year and a half, 2 years. And it created these huge returns for battery energy storage. And that in turn created a boom, right? Everyone saw these big revenues and were like, oh, this is amazing. We'll build a battery and we'll make our returns back in 2-3 years and do it that way. We just saw the same happen in Texas last year when batteries made annually something like $200,000 per megawatt on average, which is wild when you think about the cost of building a battery. But longer term, those ancillary service markets, they saturate, right? Once you get past a certain point, there are not too many, but there are enough batteries to fill up all the needs of the grid in terms of meeting inertia, in terms of frequency response on short terms, and the prices drop, the competition's there. And for a lot of people who came in thinking that was somehow a sustainable revenue, that becomes very hard to then reconcile with the fact that market's not really there anymore. The prices are much lower. The longer term business case for batteries is arbitrage, and always has been. And the people who came into the market early and knew what they were doing and knew what they were getting at, they were very aware of that. And so they haven't, I think, been too worried by this drop off. So if we look at Texas battery revenues, last year I said they were about $200,000 per megawatt across the year. This year, they're about a third of that, $60,000 or $70,000 per megawatt by the end of 2024 for this year. That's a huge drop off, but you're still seeing batteries come online at an incredible pace. People really knew all along that business case was in arbitrage, to buy low, sell high. With more renewables on the system, prices are becoming more volatile.
There's an argument, though, that the batteries moderately lose 4 to 8% of their capacity each year. I guess the round trip efficiency of a lithium-ion batteries is perhaps much higher than some of the other technologies out there. But on the flip side, you have the loss in capacity each year that perhaps even under moderate cycling conditions, you probably have an 8 to 10 year life as opposed to a life or more for some of the other technologies.
Yeah. When we look at round trip efficiency of lithium-ion batteries, we tend to talk about the mid to high 80s.
Right.
So
right.
you read but anywhere from 85 to 90, an 8 to 15 year life cycle rather than a multi-decade.
Right.
Neil, in September in Texas, you achieved a 5 gigawatt milestone of BESS capacity, and the last gigawatt was from Engie, and their batteries were 1 hour duration, and the average in Texas is like something like 1.4, 1 point something. So where are the 4, 6, 8 hours battery durations everybody speak about in the reports and in the trends? Where are they?
I think it's inevitable, right? If you look at the capex costs, what you will see is it's going to be cheaper to build out duration at scale. Where we see them in the world today, we see 4-hour batteries a lot in California. Now, in California, you've got the resource adequacy thing, which is essentially a capacity market. And that's helping these 4-hour systems come online. In Texas at the moment, it's trending towards 2 hours. You're right, there are some owners, Engie in particular, are still building out 1 hour, but everywhere else basically is trending towards 2 hours. In the UK, there's just been a recent long duration energy storage study on how they enable more energy storage of 6 hours and up. And they're suggesting a potential cap and floor scheme to try to encourage that. The capex cost of building a 20-hour battery is not 20 times that of building a 1 hour battery, right? Like the cell itself might be 20 times that. But when you look at all the other components, the build, the containers themselves, the HVAC, that doesn't scale a one-to-one level all the way up.
So do you think multiple smaller short duration batteries of, let's say, 4-6 hour battery systems can compete effectively with long duration energy storage?
So I think there's two parts to that question, right? One is, can they do the job of long duration energy storage? And I'm not sure the answer is yes. Like I'm not sure, regardless of how distributed they are. I think they'll be very helpful, but I still think you need some form of long duration storage as you aim for net zero that can look at the seasonal trends of the grid and help to shift those a bit. But when you talk about cost, I believe so very much. Yeah, I think the cost is the reason that the lithium battery ion boom is happening. Is that the market's there for them to make money, whether that's through arbitrage or short term through ancillary services. They take up relatively little room. The planning and build is relatively simple compared to much bigger. A lot of these long duration storage technologies we're talking about and that governments are talking about and putting money into, I don't see hydrogen ever happening really at scale for energy storage. I don't think the balance book would make sense for that. And so what we do have is short term, we have lithium doing part of that job at a cheap and scalable price.
You've mentioned a couple of times the word arbitrage, and I think that running a BESS is a kind of job very close to a broker, isn't it? And how does the business react to price volatility?
One thing that's worth thinking about here is BESS really thrives off intraday volatility. Imagine your battery doing a cycle per day. You want to buy when the price is low, usually overnight. And then when the peak comes, that's different depending on geography and region. In Texas, that peak is when the sun sets, slightly later in the UK. But you then want to sell all that energy back when the price is highest, right? But what we're also seeing when you talk about price volatility is that year-on-year price volatility is scary. No traditional investor likes to see that last year our asset made $200,000 per megawatt, and this year it's going to make $60,000 per megawatt. So one of the ways that's being offset, and we're seeing a lot now in Texas, is something called a tolling agreement. So essentially, since batteries have come online, you have battery owners and you have battery operators. You might know them as route to market or aggregators or optimizers. But essentially, these are the traders. These are the people who take a fee or with a contract, they will go and trade that battery because that's the thing they're good at. And the owners will take a portion of the profit and the traders, the optimizers will take a portion of this profit. But you're starting to see now with that year-on-year volatility, the introduction of tolling agreements. So essentially these operators taking out multi-year leases on these batteries, saying we will pay you a fee of whatever it might be, $70,000, $80,000 per megawatt annually for the next 7 or 8 years. And we will take all of the risk on that asset. So we will trade it, we will run it how we want to. And so you're seeing that start to offset that volatility. But yet with batteries, you're absolutely right. It's very much a trader's mindset.
So in terms of domestic policies to support battery manufacturing in the United States, how impactful has the Inflation Reduction Act and other state level incentives been to help reduce the cost of US made battery products? And how do you think the change in administration is going to impact any state level incentives or funding, grants, IRA, things like that?
When you look at all of the battery energy storage that exists in the United States of America, 94% of that is in California and Texas. So when we talk about the build out of batteries across the United States, it's not a thing. It's not a thing that's been happening. There aren't gigawatts in Pennsylvania and gigawatts in New York. There are gigawatts in California and Texas, and other states haven't really either had the need for that yet or figured out how to bring batteries onto the system yet. Now, one of the ways California did that was through its resource adequacy scheme, figured it needed lots of 4-hour batteries and subsidized that and lots of tax credits, and great. The way Texas did that is that Texas has a no capacity market. And batteries, because they do, as they are wont to do, they follow the trends, right? Where people build wind and solar, people will build batteries. And so that thing happened naturally in Texas without a ton of subsidies, right? The IRA helped a lot. Like some of the tax credits help a lot, but we haven't seen that play out everywhere else. For the clean energy transition, my personal opinion, it's not a Modo opinion, I don't think Donald Trump's a net positive for the energy transition. But I actually have a lot of faith in the market itself. Right? I have a faith in America's general free market belief. And I think that the cost efficiency of renewable energy will win out.
One question, Neil, about Great Britain. The National Energy System Operator released the report on achieving clean power by 2030, and the numbers of battery storage are huge, something like nearly 30 gigawatts of capacity, and the numbers of renewables are even higher, expecting that, let's say, an excess of renewables will charge those batteries. Is this feasible? Is this economically viable, not only in Great Britain, but these models of huge amount of renewables, huge amount of battery storage systems? Is this viable?
The honest answer is I don't know that it is. Not without huge changes to the grid and some of the systems the grid runs on, right? Like, you're going to need a lot more transmission lines, first and foremost. And it's not only the cost factor of building all these transmission lines, there's also the social factor of how it impacts people's landscape and how they think about that. So you've got the infrastructure thing, which is just Herculean. Like, the amount of new transmission lines that needs to be built is mind-boggling. And so, is it doable? Yes. Would it be the biggest infrastructure project that the UK has ever seen in my lifetime or any of my parents' or grandparents' lifetimes? It would also be that, right? We'd be going back to rebuilding after the war as the last large infrastructure project of that sort of scale. Is it feasible? I'm not entirely sure, but I love that the ambition is there. The fact that the ambition is there is a positive thing. I think the market itself gets you some of the way. I've just said this in the United States. And the fact that there's now a government in charge who are willing to deploy capital and willing to put that effort in means that there's probably more chance of it happening than there has been before.
Thank you very much, Neil, for your participation in the podcast. And let us close it with the same question we do to our guests, just in one sentence. If you had a magic wand, what would you do to unlock the energy trilemma?
If I had a magic wand. So I have a lot of faith in the market. And I'm very interested in watching how that thing plays out. So I'd be quite tempted to put the magic wand aside and see if humans could fix it for themselves. For better or worse.
Okay, perfect. Neil, thank you very much for participating, and we'll follow you in the social media and in other events.
Thank you very much. Thanks for having me on.
Thank you very much, Neil. Thank you so much. Thanks for joining us.
We hope you liked this conversation. Follow us on LinkedIn or subscribe for free to the podcast on the platform of your choice, Spotify, Amazon, YouTube, or Apple. Because in the next episode, Ravi and Jam will speak with Brad Harvicky, VP of Product at Oracle Energy and Water, who will help us to unlock the energy trilemma.